Yes, there will be certainly a shift in commercial real estate. If you really see over the last 18 months, the entire real estate sector has had headwinds across the board. The one particular pocket of the real estate that kind of managed to stay afloat is the commercial real estate, thanks to a lot of demand from IT and IT enabled services, and also these foreign multinationals coming in and setting up shops, etc. IT, the demand for office real estate, at least in the urban centers, have been fairly stable. I won't say they were growing, but they were not falling. That will see a shift, but that's not going to see again another. It's not going to dramatically make that change tomorrow. As you said, people are talking about work from home, etc. But we are also well aware that from a digital infrastructure perspective, we are not ready to work from home tomorrow. Eventually, we will get there in the next 3 to 5 years, I would say. If any, this COVID will hasten that process of digitization, etc. And there will be people will relook at before investing in a big office complex. Do I need such a big complex? I mean, then of course you need an office space, but there will be some shifts in that space, but we'll have to wait and watch. But that's quite too early to call, I would say. Demand for office real estate suddenly slackening is too early to call. We'll have to wait and watch how that space responds. Yes, the answer to that is possibly yes and no, and maybe a hybrid model. But to say that today, even if you had asked me this question 6 months back, my answer would have been a no. It cannot happen. But today, we are willing to talk about a yes and no answer. Yes, to the extent that there will be automation of certain processes within the home loan lending, like your lead generation, like your underwriting, etc., and your disbursement can be online. All of those things. There are, of course, and post disbursement, customer management can still be online, in terms of customer service, etc. There are clearly certain pockets of this home loans that are not online today, and I don't see that will become online in the short term. Maybe in the medium term, is your identifying a home. I mean, today you're not going to be logging into one of those portals that offer a home and then saying this is the home I want. You want to see the place, you want to see the locality, you want to see all of those things. So we are not there yet, and I think that's a fairly longer term thing for us to get there. The other one is the whole process around registration of a home and creation of a sale document. That's again is a offline process, because that's a government entity that we are dealing with. While they have scanned and done an upload of all of those things, that's as far as digital as we've gotten there. So it is not that you can do e-signatures, digital signature. You still need to buy a stamp paper. You can buy a e-stamp paper, but you still have to buy that and then take it and then attach it. So to a lot of extent, that will not go digital. But having said this is where, to a large extent, a lot of urban center customers will start expecting a lot of digital solutions. And these are customers who are willing to pay online for you, who are willing to set up the NACH and ECS, etc. for you also. But the one other thing that a lot of tier 2 and tier 3, especially customers from those cities, expect is a customer experience. How are you able to replicate customer experience in a digital model will depend on how digital model succeeds. Your digital strategy, how can it provide the same experience that a customer currently gets offline? Because you're going to talk to a customer, you're going to assure him this is a 20-year loan or a 30-year loan that the customer is taking, and he also wants reassurance that I'm doing the right thing by buying this apartment, buying this home, etc. A lot of these things happen today with a sales executive or with our customer walking into the offices and doing all of those things. So to a large extent, a digital strategy will have to factor in a customer experience and how we are able to do that. There's no immediate answer to that, but these are things that we will need to work on. To actually put it in perspective, if between opening a couple of offices and investing in a digital platform, today companies will be wanting to invest in a digital platform, because all of these companies have enough of brick and mortar extensions already. People like us have over 100 branches, etc. So we think we've got enough presence physically. Now we'll need to figure out how we can replicate that, digitally. I don't know if it's about 2 quarters. I would answer this slightly differently, because I don't think you can identify a winner in 2 quarters, because lending business is a marathon. You're not going to find a winner or a loser in 2 quarters. Like in any other lending business, you don't do things differently every day. You do the same thing better and better every day, and that's probably what differentiates a winner. And you got to stick to your knittings. You got to know who you are lending to, and those that don't forget the basic tenets of lending. Your cash flow, your character of a customer, and your collateral, in that order, will emerge as a winner. Because a lot of times, in especially in a mortgage lending business, in a home loan business, we kind of tend to get carried away with collateral. What differentiates a home loan from any other loan is the underlying philosophy that your home is a appreciating asset. Therefore, you can't go wrong in a home loan. You can lend to anyone. It doesn't matter, because you've got a house for you. But things like correction in prices, your LTVs, etc., falling, will determine how much of a collateral value do you hold, and prolonged periods of slowdown will actually test how your collateral holds. So to that extent, if you don't forget the basic philosophy of you lend against a cash flow, collateral is your secondary exit. As long as you keep that in mind, people will emerge unscathed out of this. There will be some blips. I don't think people will emerge unscathed out of all of those things. There will be increase in delinquencies. There will be increase in NPAs. I think we'll be kidding if we say that post-moratorium behavior of a customer will replicate the pre-moratorium behavior. There will be shifts. How can you manage that shift, and can you monitor the accounts closely? Can you do all of those small things right? Will determine how you come out of this. And a lot of times, if you really look at it, the assumptions that we've made at the time of lending, the scenarios that we've planned, all of those things have changed. We don't test a customer cash flows for periods of lockdown like this. We always ask the question, what if his demand goes down by 10%? Is he in the margin? His debt service coverage ratio is 1.1x. Should we be lending to that customer or not? Because that's on the margin. Whereas today, a lockdown like this will severely test someone's capability. You take 2 months of cash flow out, everybody will look bad. And these are not things that you do. And then the problem is that if you start doing these kinds of stressing, you won't lend to anyone. So how do you do these kinds of things? So I guess, it's back to the drawing board. Figure out what your, scenarios will play out, and how you will underwrite very differently. Keeping in mind, you got to grow your business. You got to work with the customers, but then you got to be profitable also. So that's a paradox that we will hopefully solve with, coming out of this.